baby? What's going on, Morad, Fiki? How's it going? Today, can you believe it's already February 24th? Today's Thursday, February 24th. So we are about 2 months done with this year. And it is, in fact, like we just were celebrating New Year's. This is how fast time flies. Time flies fast. And if you don't seize the moment, it's just going to pass you by. Time flies way too fast. But the great thing about this asset class that we're going to discuss today, which is my favorite asset class, multifamily apartment investing, is you don't wait to get involved in multifamily apartment investing. You get involved, you invest in multifamily apartment complexes, and then you wait. Because over time, you will be paid every single month on your investment. It is like making cash flow off of your putting your money for you. And your money will always work for you way harder than you can work for yourself, because it doesn't need any days off. It doesn't need time to break. It doesn't get sick. It doesn't get tired. It doesn't catch COVID. So, this is my favorite investment class. We're going to discuss many of the reasons why. We're going to go deeper than we did yesterday. And we're also going to talk about a few other things. So I'm so happy to have you here with me today. I know we're having some issues with the slides yesterday. So let's go ahead and make sure we don't have any issues today. But other than that, thanks for joining me. Today's day 4 of our 5-day challenge into explosive growth. I just love this. And, so the thing about investing in real estate is just, I'm so passionate about real estate because it is just a huge way that we can take a quantum leap forward and just advance our lives and our family and everything that's great about business. Real estate has been the greatest asset class for the last 2,000 years. So even before Wall Street existed and even before cryptocurrency and all these other investments, which I'm not saying they're bad investments. I like to invest in stocks personally because, I like taking advantage of undervalued companies. But the same way they get undervalued rapidly, they can be overvalued. So, the great thing about real estate, it's not as volatile as the stock market. And so we'll go into all the different reasons why I love multifamily apartment investing. But let's go ahead and dive right in for day 4 of explosive growth. We're going to go right into our disclaimer. I am not a financial advisor or an attorney or a CPA. I have all of the above, but I'm a licensed real estate agent and a real estate investor. I'm passionate about investing in real estate. We will discuss my own personal results and experiences. So I cannot guarantee any results for anybody. There are so many external and internal factors involved when you invest in real estate. And a lot of that pertains to your expertise, your risk tolerance. There's a risk tolerance level. And then looking at the individual deals. So there are so many factors that come into play when you invest in real estate. Whether or not you decide to become a real estate investor or make any investment decision is your own personal choice. And you do so at your own risk. Real estate investing is risky. Should you decide to invest, do so at your own risk. So now that we covered that, let's move on. Today's word of the day is explosive for explosive growth. Explosive is the ability or likeliness to shatter violently or burst apart. Also relating to a sudden and dramatic increase in amount or extent. When I talk about explosive growth, I'm talking about your personal growth. How can you just explode in growth and make a quantum leap? And that is 100% possible through real estate investing. I can personally attest to that. And, it's my privilege to share this knowledge with you. And I'm so happy that you joined me for this. So when you want an explosive growth, you've got to take actions that you haven't taken before and get uncomfortable. But with that uncomfort comes the growth. So hopefully, you can see that and join me in this journey. And it is my pleasure, my privilege to have you with me on this journey. So today we're going to discuss multifamily apartment investing. I'm so excited about multifamily apartment investing. When I'm talking about multifamily apartment investing, so I've had questions. Are fourplexes included in multifamily apartment investing? Are duplexes included? Are triplexes included? Are there 10-unit apartment complexes? Yes, 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 yes to all the above. Anything with 2 or 3 or 4 more units is multifamily, but what I'm specifically discussing today is 60 units minimum. 60 doors. What is a unit? Okay, let's break it down Barney style. 60 doors. I'm talking about 60 doors or more. And why am I talking about 60 doors or more? Because when you have 60 units or more, you can have on-site property management. That is what I want. I don't want to be bombarded with all the calls about toilets and plumbing and, there's a roof leak. So with real estate investing, things happen. Properties depreciate, properties deteriorate over time, and they need investment, they need upkeep, they need maintenance. And I don't want to do it. I don't want to do the maintenance. That doesn't mean the maintenance isn't getting done. That means there's on-site property management that's going to field those phone calls, line up the contractors, get the property fixed and maintained, and call the plumber or the electrician or whoever, the roofer, and they're going to take care of all that. I specifically want to oversee the investment, and I want to go look for more investments because I'm an investor, right? So I don't want to be, me personally, I don't want to be in property management. I never want to be in property management. I've never been in property management. I don't want to be in property management. I want to stick to investing. I want to stick to what I'm good at, and I want to stick to the highest and best value of my time. Highest and best use of my time is investing and looking for more investments. So I want 60 plus units minimum, and that way we can have on-site property management. A great thing as well is the monthly cash flow. Cash flow is king. Cash is trash. One of my mentors, Grant Cardone, says cash is trash. Cash flow is king. Not cash. Cash flow. Cash flow is king. We had somebody saying, love cash flow. Yes, yes, yes. When cash flow, and it comes in every single month, because those apartments are going to pay us every single month. I love that. There are massive tax advantages in depreciation. We're going to discuss that in a little bit more depth today. Depreciation. What is depreciation? Depreciation is something afforded the real estate investor by the tax code. It is codified. It is the law. It is written in the tax code. That means it is not a loophole. These pundits and politicians, they like to go on the political trail and say, "Oh, I'm going to close that loophole." It's not a loophole. A loophole is something that isn't specifically mentioned, and people found a way to go around it. So it is not a loophole. A loophole is something that people found that isn't specifically mentioned, and they can say, "Well, I wasn't told I couldn't do this, so I'm going to do it." That's what a loophole is. This is actually written into the tax code. It is codified. It is the law. It is written into the tax code. Depreciation is written into the tax code so that real estate investors can take advantage and can be incentivized of what the law allows. And so why would the government allow this? Why would politicians codify that? Why would they write that in the tax code? Because the tax code is written in such a way to champion the real estate investor, to benefit people, to do what the government wants you to do. Thereby, another way of saying this is the government and the politicians have written into the tax code certain tax advantages that if you decide to take on these investments or you decide to provide these public services, That is exactly what they are. They're a public service. You provide this service to the public. You are doing what the government doesn't want to do. And so they will give you a tax incentive. That's why it's written in the tax code. So depreciation is a paper expense, meaning nobody writes a check for that. It is basically written into the tax code, allowing me to take a tax benefit, a tax deduction for the property depreciating, when actuality it appreciates. But the depreciation expense allows us to make more investments. It allows us to take advantage of these tax laws, and it's a huge benefit because, you know, even if the property goes downhill or if there's or it's losing value, I can get those benefits right now, and we'll discuss that a little bit later. Right now there's a 100% bonus depreciation. I believe that expires at the end of this year, meaning you can accelerate the depreciation of the property rapidly. And you can do that right now. I can make an investment. I can purchase an apartment complex this year, and I can depreciate 100% of certain parts of the investment in the current year. And there's something that must be done. It's called a cost segregation analysis, and we'll discuss a little bit of that a little bit later. I don't want to overwhelm y'all. The property appreciates while you take depreciation tax benefits against your income. And if you're a real estate professional like me, meaning, and the IRS definition of a real estate professional is someone who spends at least 800 hours per year with real estate activities. So apartment syndications, real estate syndications, this is where you get a syndicator, somebody who is finding the investment and is actually going to close on this investment. And they put together a group of investors to purchase the investment collectively. That is a great investment vehicle. Now, the one thing too about these apartment investments is it is a non-liquid investment, meaning, you know, it's not like a stock or a bond where I can go on the markets and liquidate. I can hit a button on E-Trade and liquidate that investment immediately. Your money is literally invested in those apartment buildings. So we cannot pull that investment out until the property either is sold, or we refinance the property. And then we can distribute the refinance proceeds amongst the investors. All right. So yeah, let's go a little bit deeper. Why multifamily? Multifamily apartment investing provides consistent cash flow, strong passive income creation through cash flow distributions. Where does the cash flow come from? It comes from the rent payments. These doors are leased out to our clientele, and they are leasing out these properties, and they pay rent every month, and that is the cash flow that these properties produce. Forced value creation. Compared to other real estate investment classes such as fix and flips, multifamily has much more control over driving increased value of the property. I will say this. In single family homes, how do we value homes? We value homes looking at comparables. We look at sales comparables. We look at what other similar properties in the area have sold for, and then that's how we value these. So we're going to compare this specific property to the neighbors and homes within a quarter-mile radius that have sold in the recent 6 months. Well, when it comes to multifamily and cash flow properties, I'm talking about properties that produce cash flow. We value these by the cash flow they produce. It is the same way that Warren Buffett values a business. When he's looking at buying a business, he wants to know how much cash flow is this business producing on an annual basis. And then you match the cash flow to the expenses, and we get something called the net operating income. So we want to see how much cash flow is it producing, and then how much expenses do we have to pay out. And when we subtract these, we have the net operating income. And that is how much money is left after the net income, after we pay all the operating expenses. And that is how you value a property. So, it's not specifically valued by the comparables, although we will take a look at other like properties that have sold in the area because we want to see, are we overpaying, underpaying? What are the costs per door of similar investments? How much are they paying? But the most important thing is how much cash flow is this property producing? And the bank who's going to do the loan is also going to look at that. So we look at the risk mitigation through tenant diversification. Multifamily spreads the risk across many units. If I'm buying single family homes and I'm renting them out and someone moves out of this house, guess what? We went from 100% tenant occupancy on that house to 0 just by that one person moving out. And if it takes 3 months to get the house leased out again, hopefully it doesn't. But if it does, we could be negative for the year. Whereas if I have 90 or 100 units, let's say for simplicity, I have 100 units apartment complex and someone moves out. I went from, and this was fully leased out, 100% occupancy. I went from 100% occupancy to 99%. And so the investment is not going to be devastated by 1 or 2 or 5 people moving out or 10 people moving out. We're still going to be at 90% occupancy if 10 people move out at the same time. So it mitigates the risk through many units. There is high demand in the right markets. Multifamily housing continues to have extremely high rental demand, particularly in the right markets that have accelerated job growth. Here in Houston, Houston is a great job market. So Houston has the oil and gas industry, the medical industry. There are a ton of jobs. Houston is, I think, the 4th city that is headquartered to the most Fortune 500 companies after New York and Los Angeles, and I think Chicago is number 3, and then Houston's number 4 in the nation, number 4. So with a great job market, there is a great rental market. There's advantageous lending due to the increased risk of multifamily. Lenders offer high leverage, low interest rates, non-recourse debt, 100% of the renovation rehab dollars. There are tax benefits through depreciation losses, depending on the investor's income situation. Again, we talked about bonus depreciation. There is 100% bonus depreciation through a cost segregation analysis, which you have to have an outside firm come do a cost segregation study on the apartment complex, and then we will take the maximum depreciation deduction allowed by law. The ability to weather economic downturns. Housing is a necessity, and apartments have a history of being flexible, less expensive rental option than home ownership. So, of course, I always advocate for home ownership, but when you have people who are new to an area or not ready yet to make a commitment to purchase a home, it's a great way to just rent for a year. It's such a less of a commitment. And then it's a huge hedge against inflation. If we've been watching the news recently, inflation has reached ultimate highs. So there have been super high inflation at 7%. Can you believe that? This is a great way to hedge against inflation. Real estate in general, when there's inflation, everything goes up in price, including real estate. So milk prices go up, gas prices go up, and guess what? Real estate prices go up. So that's a great way to hedge against inflation. So before we go, let's take some questions. Let's see. We have someone saying, so one investment spread out to many, thereby reducing the risk. Absolutely. And that is 100% correct. We have the risk being mitigated because we have 60 plus units. That's what I love about having 60 units minimum. Because again, not only do you have on-site property management, but the risk is mitigated over many units. So yeah, and so somebody said, can you explain further about the hedge of inflation? Yeah, absolutely. So inflation is the silent killer. It is the silent robber of your money, of your dollars and my dollars and your savings account. So while Wall Street and your employer says, get a 401k, save. Okay, I don't think there's anything wrong with saving. You should definitely be saving because you need to be investing. But as you save into a 401k and there's 7% inflation, that means you got to make at least 8% per year to just maintain the purchasing power of your dollars. So if you make 8% per year and there's 7% inflation, you're only getting a 1% return on your investment. Do you believe that? Yeah, because the inflation is eating away at your savings. So real estate values, when there's 7% inflation, those values are going up. The rents are going up. The values are going up. Everything is going up. And that's a great way to hedge against that, because now the value of your investment is going up with inflation at a minimum. So that's just something to think about. When there's 7% inflation, you need to be making really like 20% minimum on your 401k, because otherwise, what's the point? You could put it into a savings account and not have the risk. You must be compensated for your risk. And that's why you're investing in stocks, bonds, other paper assets. Those are paper assets, by the way. But you're investing in those assets and you have to be compensated for that risk. Otherwise, you could just put into a savings account or a CD at a bank, certificate of deposit, if you're not going to be compensated for the risk. And so inflation is the silent thief that eats away at your savings. This seems like a no-brainer. Absolutely. 100%. So yeah, let's dig right in. Let's go right into it. So if there's any other questions, just post them here. I think we covered a lot of information. I think we'll leave it at that. But I want to go ahead and bring into the next. We have a exclusive mentorship program that we're going to be launching, the Explosive Growth Mentorship. I want you to go ahead and scan the QR code, and we're going to get you in. And what we're going to do a 12-week explosive growth mentorship program where we're going to go deeper into these topics. I'm going to help you formulate your strategy. I'm going to help you craft your real estate investment vehicle. We're going to do the mentorship workbook and resources. We're going to have our weekly calls, the private community where we're going to champion each other and we're going to build upon each other. We're going to push each other to grow and to not quit. It is very easy to quit when you're getting into something that you don't really know or aren't used to. So we're going to have the private community. We're going to have unlimited access to the Explosive Growth Mentorship, the training archives. We're going to have lifetime access to all replays and upgrades. And I got some bonuses that I'm throwing in too for the early adopters. I want to reward those who jump in early. We're going to have the Growth Mentorship Certificate. We're going to have guest speaker workshops. We're going to have real estate success stories and case studies. And we're going to have a one-on-one strategy session directly with me where I'm going to help you craft your strategy, and I will not let you down. So we're going to help build your strategy. Everybody's strategy is different. We've covered a lot of different topics this week. And so there's no one specific strategy for everybody. It really depends where you're at in your life and where you need to be and how we get you started. So we got to look at that, and it's going to take some time, but I'm committed to helping you. So we're going to do that for all of that for only $997. That's so someone's saying, whoa, I thank you. I feel the same way. $997. Or we can do 3 monthly payments of $397, and we'll be very happy to assist you with that. So I can't wait to see you in the Explosive Growth Mentorship. It is just going to be awesome. We're going to be growing together, and it is my personal mission to help you get to the next level. And that's through real estate. Real estate investing and real estate will absolutely take you to the next level. I can personally attest to that. And it has been my passion in real estate growth and investing. So I can't wait to help you get to the next level. Join me for Explosive Growth. There is a huge value in this. And, as you can see, there's over $10,000 of value in Explosive Growth. And we're not even doing it for $2,000. We're going to do it for $997 or 3 payments of $397. And I can't wait to see you on the inside. So let me know if you have any other questions. I can't wait to see you. I appreciate you joining me today. This seems like a no-brainer. Yeah, 100%. So scan the QR code and we'll get you right in. And, I can't wait to see you on the inside. Health, wealth, and success belongs to you. Thank you, and we'll see you next time. This has been my pleasure to have you this week.